All right, good evening, everyone. Welcome back. I'm on the road, so I'm kind of gonna do a hybrid of the phone plus the computer. So, normally when I'm at home, got all the screens and everything, but to read the chat. By the way, we got an after-hours runner breaking news on MGOL, so one to watch for tomorrow. Whoops, what did I do? Sorry about that noise. It's the Bellagio fountain, if that noise is loud. Hey, I was wondering about the swing trade masterclass that's in the university. The course doesn't have any steps yet. So yeah, so for all of you that are taking advantage of the swing trade course, so we've had basically we're building it out right now. So the first alert was AI. Many of you know about AI. Did really well on that. I think the entry was at 29. It went to 44. The goal was 35. Went like $10 past the goal, and then PLTR, which is it broke the signal. Great day today on Palantir. Struggling a little bit this afternoon, but a lot of stuff was pretty shaky today, but still above the stop. And then Apple, again, not really initiated yet, but those were the last three ideas from the swing trade strategy sessions. And so watch those, okay? Because what I did with those three Monday night sessions is I kind of started out, very, very beginner, where I was like, and then each webinar built on top of the last. So we went from, basically very new to then built on. And then the master class I'm working on right now. That should be up there, man. I want to say a week, but it's kind of busy lately, but soon the master class will be on there. But take advantage of those three sessions, and then remember, every Monday night I do that. So this Monday night will be there live again, going through that process. But the master class is coming. Ken says the psychological battle I face is this: I will be in a stock that hits my entry, goes up, but never hits the goal, and then failing and hitting my stop loss. It keeps me saying, kind of a long question. So the biggest answer, so Ken, um, one of the ways that we manage risk after entering a trade is the 5 minute candle theory. Okay. I don't know why I named it theory, but that's the name I went with. So basically, the idea is this is a way to capture as much profit as possible if the stock does not hit the goal. Okay. And what it is basically, and actually I think there's a few YouTube videos, and if you're in the steady trade team, there's one of the most watched webinars specifically focuses on the 5 minute candle theory. But where we use that is stocks, these big runners that again they hit the signal, they run up, and then they start struggling to push through to the next level. And the reason, and basically to boil it down, is a red 5 minute candle is now this will get you. It's always a double edged sword, letting your winners run and taking fast profits. Now, and it's the dichotomy. Like this is one of the things that so many people struggle with, and everyone struggles with every day. Is just that idea of take quick profits. Like Hoth yesterday, that buy in pre, sell in pre, at 308 on Hoth yesterday morning, and it was like 330, 340, and I'm like, guys, we're going into the market open. Probably best to take profits. It ended up going to 4, but the reason we use that idea is, I mean, these stocks move up fast and they move down fast. And I'll get back to the 5 minute candle theory. Let me explain this. Like, especially newer traders, like, you have to understand that volatility is what gives us the ability to make, 20, 30, 40, 50, 100, 200% in a day. But there is no, volatility cuts both ways. Like you can't have your cake and eat it too, okay? So you have to understand that, like, if you're sitting on a nice profit, 20%, 30%, 40%, and you start getting that feeling like, man, the stock's not going like I thought, and you take profits, and then the stock rockets higher, you're responding to something. Not to get into the crystals and the patchouli oil, but the universe. I mean, and a lot of this comes with watching price action. Okay. I get that you want to capture every cent of the move. Okay. If a stock goes from $3 to 401, you want to buy at 3 and sell at 401. Okay. But a lot of it revolves around just interpreting the price action and recognizing that this stock went vertical and it's not going vertical anymore. It's slowing down. It's butting up against a whole dollar, half dollar, or a previous day's highs, or an Oracle level, or a moving average, or a Bollinger Band, okay? Whatever technical indicator you use. And that's, I think so many people actually see that. Like, was it Ken? Ken, I'm curious. Have there been times when you're in this stock and you're up small and it's kind of sitting there and it won't go? It just won't. And I'm curious. And I mean, I'm answering Ken's question, but it's kind of for all of you. Like, Ken, was it crossing your mind that you're like, man, I don't know, this feels different? And I know when I say feels, I always make the same crystals and patchouli oil joke. But a lot of price action is based on your experience and things you've seen before that maybe you can't necessarily put to words or write down. And you're just like, man, I don't know. And that is a signal. Okay, that's a signal that, okay, my goal was $4, but it's at 360 and it just won't go, and it just won't go, and it perks and it drops, perks and it drops, perks and it drops, and you're like, man, it's like, why won't you go? So that is something that is built really over time. All right, I'm going to drop a read for tomorrow and then we'll move on. Evidently everybody, maybe I answered all the question, I don't know. So anyway, for tomorrow, MVIS had much higher expectations for this into the close, but did squeeze up back over 8. Had a little bit. I really thought this could get squeezy in after hours, but a big run again. Whoops! Oh, slack. So sorry. Did I miss it? Ah, okay. Now I see it. Okay. So, okay. Sorry, Alex. Sorry, guys. I missed the questions. I got all kinds of questions. I didn't see all these. So I hear so many different meanings of this. What's your interpretation on the difference between trading a strategy, a setup, and a pattern? Okay. So good question. So when I think of a strategy, okay, that is more of like a swing trade strategy. Okay. So if you've been on any of those swing trade webinars, you know that there are about 10 to 15 distinct criteria that we look at. And if those criteria are not met, then the stock doesn't fit the strategy. It's an ignore. So a strategy to me is much more rules based and looking for very specific things in the market. Like when we look at dip and rips, okay, which would be a pattern, like a low float biotech with BS news is a pattern, okay? That is a chart pattern. And you could call it a setup, I guess. But at the end of the day, we know what every low float biotech is going to do. They're going to spike early and they're going to fail and they're going to fade away and then they'll do an offering and then they'll repeat it, 6 months down the road. So strategy is a methodology and a process with a lot of criteria that allow you to only execute a trade when those criteria are met. The next is a setup and a pattern. Okay. So a pattern is strictly chart based and price and volume based. A dip and rip, a morning panic dip buy, an afternoon VWAP hold. A lot of these are really simply based on chart patterns. $1 breaks. Okay. We've seen so many recent biotechs, they break $1, they predictably spike 20% past that. VWAP holds. All of these are patterns that we can often kind of ignore the sector or ignore the news because we know there's pattern traders that focus on those. So it's more simple. Like a pattern is just a chart pattern. That's all it is. And we know that when they hit these specific levels, they tend to spike. And then a setup, when I think of a setup, it is just, and this is kind of vocabulary, which is awesome. But when I say setup, that is a stock that is matching one of these systems. Okay. So it's kind of like branched out of that. So it could be a swing trade setup. It could be a dip and rip setup. It could be a morning panic dip buy setup. It could be a earnings winner setup. So basically, setup is just breaking down or delineating what basket it fits into. Short setup, long setup, swing setup, dip and rip setup, VWAP hold setup, weak open red to green setup. Is STT planning an in-person trading seminar? Yes, Frank. It just oh man. So yes. So many times I've gotten very close to doing an in-person meetup. And what happens is just trying to get the logistics to fit into my schedule because so I think most of you know what I do. So what I do is, all day long live trading webinars with several different groups, but every single day. Okay. And I know a lot of people say that, like I know a lot of people are like, oh, grind every day and no days off and and all that. I live it. Okay. I live grind every day, no days off, literally every day for the last 8 years. I have done something to help the traders that I mentor. It could be a YouTube video, it could be a blog post, it could be 4 webinars a day. So what happens is we come close to kind of doing these in-person things, and then I kind of get like a revolt from the people when I'm like, well, I'm gonna do this in-person event for 3 to 4 days, so no webinars, no live mentoring. And then I get all this pushback, and I'm like, okay, whatever. So it'll happen, but I don't know. I'm trying. What do you think prevented MVIS from spiking? It was great question. So MVIS had that morning, and I'm going to finish on this one. So MVIS was flat out, Chris. It was disappointing today. Um, I really, really thought MVIS had very, very solid potential, and based on price action. Okay, the fact that it's on your screen right now. The fact that this thing held above yesterday's highs all pre-market, which is also a 52, right? Yeah, 52-week high. Shorts are trapped. Okay, so MVIS this morning was like, it was there, and it spiked $1 a share at the open. By the way, like the whole thesis on MVIS was heavily shorted trash stock. I mean, MVIS is the worst. Okay, remember, I'll say it like 16 times. MVIS is the worst. This thing will end terribly. Okay. Six weeks from now, it'll probably be a $1 stock. But that dollar spike at the open was proof that shorts were on their toes. Somebody panicked at the open. Now it ground all the way back to 8, only got to 820, but it's still, I mean, look at where it's at right now. Look at where it's at. It's still at a 52-week high, and it's still above yesterday's highs. So what happened? In my opinion, just like there wasn't enough mania and FOMO and chasing and irrational exuberance. Like the energy level today was very odd. Those of you in the steady trade team know that like today was a unique webinar. Okay, if you're in the steady trade team, watch today. I can't recall the last time I struggled so hard to find the number one stock. Now I think that's a little bit of it's a summer Wednesday, okay? And listen, I'm not one of these guys that says sell in May, go away, get out of here, okay? Now, flat out, when we talk about summer, number one, if you hear anybody say sell in May, go away, get them out of your life, never speak to them again. It's not. Everything changed in 2016. You've heard me say that a billion times. Everything changed in 2016. Summers have been very hot since. If you traded a summer during the dark days of day trading, like 2011, 2011, 2012, 2013, pain of just nothing happening. But with the seasons, okay, there's 4 seasons. If there's a foot race of 4 people, somebody's got to come in 4th, right? Okay. Now, it could be the 4 fastest people in the world. 8 billion people on the planet. 4 fastest people in the world. Somebody's got to get 4th. That's summer. Also, you've heard me talk about the U-shaped volatility. If it's a foot race of 5 people, so Monday, Tuesday, Wednesday, Thursday, and Friday show up to the foot race, they could be the 5 fastest people in the world, but somebody's got to finish 5th. It's just the way it is. Somebody's got to be last. Unless you're one of these participation trophy morons. Somebody's got to finish in 5th, and it's Wednesday. So today, Summer Wednesday. And like, you may think of that and you may hear that answer and be like, that's it? That's why MVIS didn't go wild today? It just wasn't like a hot, crazy type day. It wasn't. And like, I spent like 2/3 of that webinar this morning doing this. Seriously. I mean, I could probably upload it to YouTube or something. If you were on that webinar for 20 minutes, you saw me face palming because of the lack of volatility today. So now, in summary, guess what stock is still at 52-week highs? Guess what stock is still green on today? Guess what stock is still above yesterday's highs? So I think MVIS can still do it. So, all right, my friends. Have a good night. Good questions tonight. Sorry I missed them. Thank you, Alex, for reminding me. And see you next week.